Hey guys, Jared Wesley here of Live Traders. It is that time of the week. It's lecture time. This week's topic, guys, is risk levels and insanity. Unfortunately, this is something that too many traders do wrong, right? You're risking too much too soon, unfortunately, and you're acting insane. You're not following your plan, or you don't have a plan. You're looking at trades that maybe almost stop you out and then they work, or trades that almost work and then stop you out. And what happens is when that goes one time against you or not in the direction you hoped, the next time it happens, you break your plan and do something foolish. So today we're going to talk about money management. We're going to talk about discipline. We're going to talk about risk levels, and we're going to talk about how to follow your plan. Because if you don't, you have no business being in this business, right? Every business has requirements. And one of the requirements in this business is discipline. And if you don't have it, move along. I mean it. Look, you hear Michael Jordan, you hear Tom Brady, you hear all these successful people talk about why they're so successful. And one of the main things they talk about is doing what you're supposed to do when you're supposed to do it, no matter what. That means there are days you don't want to do it, but you do it anyway. There are days it's raining out and you still go for the jog. There are days that you really don't want to wake up and do it, and you do it anyway. Trading is the same way. There are times when you're so close to target and you're biting your fingernails off. You got to let it go. You got to let it go. And every once in a while, it's going to get a nickel from your target and come all the way back against you. And every once in a while, it's going to go a nickel from stopping out and hit your target. All right, that's just the way it is. And if you lack that discipline, listen to this lecture because it's going to help you. If you get to a point where you don't have discipline over 3, 6, 9, 12 months, quit the business. Because you're only going to cost yourself a lot of money. All right? Now, I'm not encouraging you to quit. I really don't want to encourage anyone to quit. But there's a time and a place for it. Some people are just gamblers and they go on tilt and they have no business being in this business. All right? So I hope you guys like this lecture today. It's a serious one, and it's one that will hopefully keep you on the straight and narrow and certainly keep more money in your account than out of it. All right? I am Jared Wesley of Live Traders. Let's get to it. This week's lecture topic is risk levels and insanity. I haven't talked that much about money management in a while. It's been quite a while, actually. So today I thought it would be a good idea to maybe just shake you up a little bit. Now, I understand, I'm fully aware that chart lectures and all that other thing, we're going to look at charts today, don't worry, that chart lectures are what keeps people watching. And it's a very interesting point in this business that the psychological aspects and money management aspects, which are by far the most important things that you'll do in this business, are the least popular things. And that is often the case in life. The things you really don't like to do are the ones you need to do the most. Like, nobody loves leg day at the gym, but they love to go bench press. Why? Tell their friends what they benched at the bar, right? It doesn't matter. So you see all those guys with chicken legs, right? Same in golf. You spend all that time hitting the big dog when you really should be on the putting green or in the sand trap. So that's kind of where we're at today. We're going to talk a little bit about risk levels. Now, the beginning of this will be very basic. So for the people that have experience, you're going to be like, oh, geez, Jared, I know. I get that. But sometimes we tend to forget that most people listening are not professional traders. And I know this, and one of the reasons I'm doing this lecture is because I've gotten a few emails recently, and honestly, it made me rethink my approach, not my approach to trading, but my approach to teaching, because I always tend to assume everybody knows everything. Not everything, but they know a lot. So today I'm going to kind of push that assumption aside, and there's going to be some very basic stuff in the beginning, and then we'll start getting into a little bit more advanced stuff, et cetera, and so forth. But anyway, risk levels and insanity. And I'm basically talking about what traders do, how traders act, and why traders fail. Plain and simple. So when you think about this question, right, you guys, I've drilled it into your head so many times that it shouldn't even take you more than a second to answer this. But remember, I say it a lot, the people answering in the chat room are the ones that generally type and participate in the chat room, which tends to be less than 10% of the actual total number of people in the chat room. So that means you have hundreds and hundreds and hundreds of people in the background doing nothing but listening and never typing. They never even get close enough to their keyboard. They're too scared, whatever it is. So I don't know what they know because they never let me know what they know or don't know. So how much should you be risking per trade? It's a lot less than you're probably risking. Right now, many of you have taken professional trading strategies, etc. You know the answer to this, and I'm not going to answer it right now. We're going to get to it later. It's just a question I want you to think about. If you're new, how much should you be risking? If you're experienced, how much should you be risking? If you're in the middle, how much should you be risking? This isn't just for brand new traders. It says how much should you be risking. It doesn't say how much should a brand new trader be risking. It doesn't say how much should a 15-year trader be risking. How much should you be risking? That's the key here. I want you to think about yourself, okay? I want you to think about yourself. It could be, Jordan, it could be. 95% of the people just don't know anything. I'd go along with that because wherever I go, I feel that way. So yeah, I would agree with that. When I'm driving, I feel that way. When I listen to overhear people's conversations, I feel that way. When I watch TV, I feel that way. So you probably make a good point. So anyway, this is the market, okay? Like taking candy from a baby, right? Like taking candy from a baby. I'm sure most of you have seen The Simpsons before. I can't assume that either, can I, Jordan? But this is the market basically from its tower looking down at all of the people out there thinking, gosh, this is a great day, isn't it, right? And then, bam, this is what it feasts its eyes on. Because to the market, this is basically what you are. Now, I know you don't want to hear it, and it's not me being rude at all. It's just, I think you guys have seen enough of when will the insanity stop segments to know that it's not a passing thing, that many, many thousands of people come into the market, millions perhaps, and they have no idea what they're doing. And let's be honest about it. Let's just call it the way it is. Were you that way when you started? I was. 100% I was that way when I started. I mean, I told you guys this before, and it's a true story, and I'll say it again. It's been a long time. The very first actual trade I ever took with regard to, like, when I made the decision, I want to be a trader. Not when I was on Wall Street and you bought some investments or this or that. I don't mean that. But when I made the decision, I'm going to be a trader, and the very first trade I took was eBay. And I took 4,000 shares of eBay. Okay? Now, eBay wasn't hugely expensive. I want to say it was like a $30 or $40 stock at the time. But 4,000 shares. That means every penny was $40. What business did I have taking 4,000 shares of eBay? My very first trade with little to no, like basically no trading experience other than Wall Street, which isn't the same thing. No education, no nothing. So I'm sitting here telling you this from personal experience that I've been in your shoes. I've been there. I've done that. Now, thankfully, I made money on that trade, but that was ridiculous, stupid. And I think many of you folks do the same thing. Is it raining? No, it is. Right? I think many of you guys do the same thing. You come in and you just think, oh, I got this. And then your first thought is not, I don't know anything. That's not your first thought. Your first thought is, well, I can't pay my bills with 5 shares or 10 shares. $5 risk, $10. I can't pay my bills doing that. Well, you're not supposed to. You're brand new. You wouldn't go in and fight Mike Tyson if you had no experience. And heck, if you did have experience, you'd still be scared, right? So your expectations exceed your experience level, okay? You just have to admit a few things, okay? And I'm not knocking you. I want to be very clear about this. This is not to degrade or downgrade anybody at all. I was in the exact same boat. I was probably worse than many of you because I came from Wall Street and thought, this is the dumb money that I'm dealing with. Ha ha ha, these idiots, right? I had a big ego, probably still do, right? But you have to admit several things. You are overhyped. You're so excited to be in this business. Tell me I'm wrong. The first time you open that trading account and fund your account and you're like, this is awesome, right? Awesome. I'm going to go make $1 gazillion out of this. Okay, even if it's not $1 gazillion, you're like, oh, this is sweet. I'm going to get away from my job, my boss, and you're just hyped. You're stoked, right? You're also probably, not all, but I would say from my experience doing this for 20 years, the majority of people, 75%, are undercapitalized. Not everybody, but the majority of people that I come across barely can scrape two nickels together. And they're overhyped on top of it. So they're coming in with a $2,000 account thinking they're going to make 200 grand a year. That's the overhyped, and you're combining being overhyped with undercapitalized, okay? Your expectations grossly exceed your experience. This is you having never driven a car before, thinking you're going to be better than Senna or Schumacher or Hamilton or Max Verstappen. Okay? That's you. Literally, you're like, I just got my learner's permit. I opened up a trading account. And now I'm going to go beat the best in the world at this. Tell me I'm wrong. I'm not. You can't. Because that's the way most people do this. And they come in, they're like, I got this. Here, hold my beer. 6 months from now, you'll see. You'll see. I'll show you. No. The market doesn't care about you. And the only person you have to prove to is yourself. The people on the outside don't have a vested interest. They don't have any money or skin in the game. Only you do. So don't let your expectations exceed your experience. Your timeline is way too short. Yes, I know it hurts, but it is, right? You're thinking 3, 6, 9, 12 months. Very rarely do I meet somebody and I say, hey, how long are you willing to give this business before you walk away? Very rarely do they say anything more than a year. Occasionally 2 years. And they're like, yeah, if I'm not making good money in a year, why would I stick around? And definitely 2 years. And then they say, oh, well, I might be willing to give it a little longer. If I feel like I'm getting close, at the year mark, maybe I'll give it another 3 to 6 months. Right? Well, what can you be truly great at a professional level in 12 months? I don't care what it is. I don't care if you're talking about, crochet. I don't care if you're talking about, being a carpenter, right? Or being an airline pilot. In 12 months? How good can you really be at anything in 12 months? Not very. You can be okay at it. You can get to a level where maybe you're respectable. But now we're talking about putting you in with the best people in the world. The very best people. And guys, I mean, these people are the smartest people you'll ever meet, from the best schools you've ever seen, and then they're focused and greedy MFers on top of it. With, wait for it, the best teachers in the world. So not only are you taking the smartest people in the world that went to the best schools in the world and finished at the top of their class at the best schools in the world. I'm not kidding with you. This is not a joke. These people finished top 3 in their class at the best schools in the world. And then they're being taught by people that have 20 years experience. You don't think they're going to be pretty good at this? And then you're coming in all nonchalant like, yeah, man, got me a Robinhood account, put $2,200 in it, borrowed against my credit card. I read something on Google, I'm going to be okay at this. I saw some Instagram, 60-second video of some dude who turned a 500 into 5 million. That's going to be me. What? Are you kidding me? Is this a joke? But some of you are laughing because you're like, that was me. And other people are laughing because you're like, wow, people really do that? They're the two sides of this. Some are laughing because you're like, damn, you hit the nail on the head. That's me he's talking to. And the other half of the people are like, wow, people really do that? Yes and yes. To both sides, yes and yes. Okay? It's insane what people do, right? You're different. I always laugh at this because that was me. I mean, I'm like literally looking in a mirror right now. You're different. Oh yeah, I was special, all right. Especially stupid. That was me when I started. I was like the smartest dumb person you ever meet, or the dumbest smart person. There we go. The dumbest smart person you'd ever meet. I wasn't different, but I thought I was different, right? Now, maybe in the long run I proved I was different, but in the short term, I proved I was just like everybody else. In the first year or two, I was just like everybody else. I did all the same things. I was so hyped. So, I mean, guys, let me put it to you this way. This is a true story. True story. I did not need money when I started. I started with $56,000. So I would not consider that undercapitalized at the time. That was enough money, right? 3 to 6 months in, it's a true story. I'm laughing because I'm just thinking, how stupid am I? 3 to 6 months in, I thought, well, maybe, I need to increase my risk, or maybe at some point I'll need more capital, whatever. And, my dad was talking to me about his investments and all this, and he's like, you're into that trading thing, right? I said, yeah. He goes, how's that going? I said, yeah, it's going well, right? Lying through my teeth. I wasn't making any money at all, right? And he's like, well, what if I gave you like 50 grand to trade with, right? And you give me 50 grand at the end of the year, like 100% return. I was like, oh yeah, no problem. Literally, that was my exact thought process. I already had enough money to trade with. I didn't need anyone else's money, but I just thought 6 months, shoot, by the next 3 months, I'm going to be killing it so bad that it would be nice to do something good for my dad. So I'm looking at it thinking, yeah, I'll take 50 grand, and give myself more buying power. I can make you 50 grand in a year, no problem. After 6 months, thank God I didn't lose any of his money. I said, this isn't working out the way I thought, and I gave his money back. That's a true story. Okay? And it wasn't until that point, about the year mark, where I realized I need to think differently, or else I'm never going to make it in this business. So that's when I really started to get genuinely serious. And guess what? It still took another year of being super serious before I even started sniffing profits. Sniffing, a couple $100 here or there, 500 a month, 1,000 a month. It took it 2+ years before I even saw that on an inconsistent level. So the first year was just me feeling things out. The first 6 months was pure ego, just pure ego. And then the second year was like, okay, you got to change something, because this isn't working, right? I did. I gave him his money back. It's a true story. Anyway, and I think that in the long run helped me, but hurt their opinion of me doing this business, right? They're like, so you left Wall Street for this, and then 6 months after giving you money, you gave it back because it wasn't going well? What are you doing? Now it's a whole different world, but back then it wasn't, and I'm sure many of you have felt and dealt with the same thing. Family members look at you with deer in the headlights like, oh, gee, good luck with that. Yet, these are the same people that are like, hey, I'm in crypto. What? Did I sim trade, Steve? No. I sim traded for a couple days just to learn buy and sell orders. Does that make sense? But no, not at all. I didn't sim trade. But again, back to my point, I think many of you have been through that because, and I'll segue into this, and you've seen this, Jordan knows it because he's seen all my lectures and he's memorized them all. This is what happens when you Google trading. This is what you see. This is an actual email that I got on the right-hand side. This is a real email, 5K to 1.3 million in just 3 trades. Doesn't happen often, but occasionally something completely unique comes across my radar. In this case, I'm talking about legal insider trading. Traders who have consistently signaled, guys, note the word signaled, not made, not earned, signaled 453%, 610%, and even 1,036% gains. Until now, they have been doing it completely under the radar because your marketing sucks, because you're only signaling, right? It does, Martin, to a person with common sense and no ego, but what if, Martin, 6 months into the business, you're struggling so bad and this email comes across your desk and you've been bopping around from chat room to chat room to chat room, from educator to educator, or you have no education. This sounds appealing, doesn't it? It sounds appealing, okay? Register for the imminent briefing. You'll see how just 3 of the, and here it is, this is key, very key, read the words carefully, You'll see how just 3 of these trades could have generated, not did, not let me show you my account, could have generated 1.3 million in profit, starting with a $5,000 stake. This happens all the time. These emails are not unique, right? Not unique. Trader turns 1,500 to 1 million in 3 years. And you think, if this person can, I can. These are real, guys. Real. I just Googled day trading. How I showed a 16-year-old to turn 500 and 520,000, 0 to 1 million in 18 months trading Forex. How Fred make $1 million. That's real. Copy and pasted. This one's me. I'm sorry. I just had to throw one in there. But these are real off of Google. 4 of these 5 are real, and this one over here is in my inbox to this day. So it's understandable why people get so hyped up, right? They do, because they're already excited about the business. Before they read this stuff, they're excited, like, oh man, I heard so-and-so, like you've never met the person. And it's like an enigma that, you know what I mean? It's like my sister's aunt's brother's uncle's cousin just bought this $2 million home because they made a bunch of money in crypto. And you're like, really? And why is it so easy to appeal to people? Why? Tell me why. Seriously, why is it so easy to appeal to people? Anybody know? Why is it so easy with these types of ads to appeal to people? Exactly right, Sophia. Some form or level of desperation. There's levels of desperation. You might not be living in a tent on the street, but you may really hate your job. Got passed over for a promotion. You're driving an hour and a half to work, whatever. But you're really unhappy or dissatisfied with your lot or position in life. Other people are the other end of the spectrum of literal desperation. They're like, this is my last $5,000. If this doesn't work, blah, 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 blah. Right? So they're desperate. And because of the desperation, they are seeking quick ways to make money. And this is not it. Right? This is like the hardest way to make money. You can make it. But when you get it, no one can take it away from you. And that's the difference. See, somebody can close the health inspector can close your restaurant down. People can stop coming to your restaurant or this or that. Once this is in your brain, barring an unfortunate brain injury, no one's taking it away from your brain. No one. So, once you have it, you reap the rewards forever. But in the beginning, this is what people see, okay? The truth is, people underestimate what's required, right? You must recognize and respect the difficulty. And here's the problem, too. Many of you are hearing me say this, and you're nodding your head like, yes, I know, Jared, I've only been doing this a month. But you still don't fully believe what I'm saying. You're not fully appreciating what I'm saying. You know how I know? I'm sorry, I'm just going to be blunt. You know how I know? Because you won't be here 6 months from now. You guys remember the statistic I told you about a month ago? How many people spend 1 full year in the chat room? I won't repeat it. It's a low number. So that's how I know you're not serious. Because while there are plenty of great places out there to learn, there aren't that many in the big picture. Does that make sense? Right? 95% of what you see out there is garbage. There are about 5 or 10% that are quality places, and if you find one, stay. Stay, for the love of God, stay. Okay? But most of them are just churn and burn them, churn and burn them. And that's what happens around here too. People just, they don't stay. That's how I know you're not serious about it. Because if you think you're not learning properly here, or it doesn't work, it's not here, it's you. Okay, we see it every day. Okay? So you have to recognize and respect the difficulty, the mental and psychological challenges of it, the hours of hard work and dedication, the constant adjustments to an ever-changing market, the stress of financial risk. Guys, I still, from time to time, get stressed. I was in 2 open trades today, and I was like a yo-yo string, right? Meta looked good for a second. Meta looked bad. Walmart looked terrible. Do you guys remember Walmart came 11 cents from our stop loss today? I was down $4,000 on Walmart today at one point in time. And at the same time, I was down a couple grand on Meta. I was down like $6,000. And you know what? I ended up making $5,800 on Walmart. And Meta, we'll see what happens with it. But my point I'm making is, even for me, I've been doing this a long time. You still have a little bit of a roller coaster. B. Graves, how you been, man? Good to see you. You still have a little bit of a roller coaster, period. Even if you're at $5 or $10 risk, because your ego is attached to it. It doesn't even have to be the absolute money. Guys, if I was trading 1 share, my ego is still a part of that 1 share. It's a true story. It's not the money, it's the ego for me, the need to be right. Okay? So this is the only job that will cost you money each day if you're not focused. This is the only job out there that you can do a really, really great job and still lose money. Like you can do everything right and still lose money. Most jobs you have the opportunity to earn money or not earn money. Very few jobs give you that third leg. Earn money, not earn money, lose money. Very few jobs can you walk in and 8 hours later have lost money. They're out there, but they're few and far between. Okay? You need to continually work to improve. Continuing education, constant review and analysis of trading, prepare and train for the market. Do not be afraid to make necessary changes to improve, but make sure you have a clear, objective reason for doing so. My point I'm making is this ain't no hobby. It's not a passing thing. It can become a hobby when you have 5-10 years of consistent profits and experience. You want to do it for an hour a day, great. But in the beginning, if you want to really make money, you're going to have to work your ass off for it. I mean, I look at this as being like a professional athlete. You need to put your best foot forward every day. You ever hear the best of the best talk? You ever hear Tom Brady or Michael Jordan talk? You know, they talk about, I'm a human being, I'm not a robot. But you think I'm a robot because I act like one. What I mean by that, and what they mean by that, is there are plenty of days they don't feel like doing certain things, but they do it anyway. That is the mark of a true professional. When you don't feel like it, but you do it anyway because you're supposed to and you have to. How many of you, for example, I know it's a stupid, silly example, but it's one that's affected me in the past. How many of you have a bad day, -2R, and you don't fill out your spreadsheet that day because you don't feel like it? But you have a 3R up day, and the first thing you want to do is fill out the spreadsheet. Ooh, baby, let's get this out of the way quick today. But then you have a shit day, and you're like, yeah, I'll get to that tomorrow. I've done it. Raising my hand. I've done it before. That is an example on a small level example of not being disciplined, not doing what's required of you because you didn't feel like it, because it doesn't feel good. It is painful, right? But there are many examples of those things, okay? So you need to realize and appreciate and respect the challenge of the business. And realize, and this is maybe the most important part, why are you doing it? Without a big enough why, the how doesn't matter. I'm going to say it again. Without a big enough why, the how and what doesn't matter. The how only matters when the why is important enough. Okay? When you have a big enough reason for something, you will stick with it and figure it out. When you don't, you will walk away and quit. That is it. That's just the way it goes. You know the saying, I say it all the time, so it's nothing new. You're tired of hearing it. When the pain to stay the same becomes greater than the pain to change, you will change. Unless or until that happens, you will not change. You will just keep doing what you've been doing over and over again, stuck in purgatory. All right, let's move on. So, you're going to need to limit trades to only those in your trading plan. Ali is very good at this. And why? Because variation is a process killer. If you keep taking trades that don't match your trading plan, it's hard to know if your trading plan works. Because when you go back and look at the empirical data, it's mixed in with a bunch of trades that weren't actually in your plan. And you're not going to know, unless you mark it down, not in plan, you're not going to know which ones those trades were. So limit trades to only those in your plan. Don't take on too much risk per trade. Limit the number of trades, limit how much you risk per trade, and you slowly increase this. You don't take on too much capital risk in your account, right? I see some people risking 2 to 5% of their account on trades. Wow. Like, wow. That's a lot. That's a big number. 1% I think is an acceptable maximum, not new traders. I'm not talking to new traders. Did I mention I'm not talking to new traders? You maybe here or there can go 2%, but that's a lot of risk. Anything above 2% is, to me, is crazy. All right? You should be in that $5 or $10 risk range, and you earn that right, okay? Use the checkbox approach to stay organized. You have a checklist of must-haves and would like to haves. And you say, for example, these 6 or 7 must-haves, I have to have those. No trade happens without every one of those boxes being checked. Then you may have 6 or 7 like-to-haves, but you might only need 3 of those. Make sense? So you divide them up. Have to have, have to have this. If it doesn't, do not take it. Liquidity could be a have to have. Certain level of spread. Maybe you don't take stocks with more than a 50-cent spread. I try not to. Okay? When it comes to like to haves, you might say, I'd like to have a bottoming tail, but I don't have to have a bottoming tail. But you need to figure that out and sort that out, and that takes some time to do that. And then when you get to that, guess what? You can get to a point where you become robotic, right? When you think about what Ali does, his goal is to what? Systemize his process. That is basically what being robotic looks like. So that it's like you see it, you act, you're done. If it's not there, you don't do anything. There's no gray area or maybe I should or maybe I shouldn't. It's just it is or it isn't. Does that make sense? And that's a very good approach, especially for new traders, because it takes what? Your subjective mind out of the equation. Because it's your subjective mind and your ego that cause you all the trouble. It really is. Okay? Even the best technical trading system will not take you far without the help of solid money management rules. Now, this is a very basic slide. The next two slides are very basic. Bear with me. Bear with me. Entry, stop, target. That's it. That's it. I'm not going to spend much time on this. Now, for the people that are in here, the people that type every day, this is a joke. This is like below 101 trading. Trading 101, this is below that level. You know what this is like to the average person who hasn't come through here? This is like gibberish. This is like the Matrix. Seriously, you'd think I'm joking with you. They just buy stocks and they get out when they feel like getting out or when the pain is too great. Not a joke. Not kidding at all. How many places you go to that literally preach entry, stop, target, entry, stop, target, entry, stop, target? Not many. There are some. Of course there are some. But most do not. They're just like, oh, I'm going to buy me some Microsoft. When are you going to sell? When it goes higher. Where? I don't know. Well, what happens if it goes lower? It's Microsoft's long-term position. I'll hold on to it for a while. Okay, but what's the number? I don't know. So you just bought something, and you really don't know where you're going to get out if it goes well and where you're going to get out if it doesn't go well. Can you use the word gambler? Can we say it together? Gambler. That's what it's like. That's what it's like. So while this is extremely basic, it's the foundation of your trading. It's the core of your trading. Entry, stop, target, entry, stop, target, entry, stop, target, entry, stop, target. That's it. Get it in your head. Nothing happens without this first happening. And I think most people here get that, so I'm going to move on from it. Okay? Now, Yaroslav, I don't know if you're in the house. While everybody's trading style is different, everyone has a different approach depending on your personality traits, your time constraints, your capital constraints, right? Your financial constraints, intangibles, the patterns that you take, the market conditions, the time frame you're on, right? Everybody's a little bit different, okay? But I'm telling you generally, especially for newer traders, giving your trades more room is generally a better thing to do, generally speaking. Experienced traders, well, you can do pretty much whatever you want because you have a track record of consistent evidence that suggests the future will be similar to the past in that you'll be profitable. That's the goal. New traders do not have this track record, and therefore you have to earn it. And in earning it, I have found for most newer traders, giving your trades more room is better. Why? Think about it logically. I know it's hard. Common sense is dead. I know. Think of it logically. When you're new, you tend to make more mistakes. Genuine mistakes. I don't mean like convoluted, on purpose mistakes. I mean actual mistakes, errors. Well, it always helps if you make a mistake to have a little more flexibility. So I always tell newer traders to err on the side of wider stop losses because it gives you the most flexibility. Okay? You can use that tight 10-cent stop or whatever that tight stop is, but you have the least amount of flexibility, right? Like me yesterday, exactly, right? Now, I know what you're thinking, and this is why it happens. But It's going to take me longer to get to target if I use a wider stop. Yes, it will. But you also have the best opportunity of not stopping out because it's a wider stop, and the opportunity to add more, and the opportunity to raise your stop. So, for example, hypothetically, let's say you use the 40-cent stop in this case, and it starts to move 20 or 30 cents in your direction. Now, I know what you're thinking, but geez, Jared, if I use 10 cents, I'd be up 3-1. I understand. But you can also raise that stop up halfway through your trade to a 20-cent stop, to a 10-cent stop. It gives you more flexibility. Now, I know many of you are still not going to listen to this, and you're going to get shaken out. Guys, I could have used a tighter stop today on Walmart, but I used a wider stop. And thank God we did, because it held our stop by 11 cents and then hit our target. That would have been a $5,000 difference. No, that would have been a $10,000 difference. The difference between stopping out and making $5,000 or $5,800. Yeah, pretty big difference. So if you're newer and you do not have a track record, please use the wider stop. Use the chart. Use the chart. But given the scenario of, hey, I have a 10-cent stop or a 20-cent, use the 20-cent. Hey, I have a 20-cent stop or a 30-cent, use the 30. Use the 40. Use the wider stop. Why? Because eventually you will learn through experience where that level is and how you can fine-tune it. Later on, you can start maybe tightening things up once you have 500 trades under your belt, 1,000 trades under your belt, and you have some semblance of a track record. Now it's like, okay, I can make some tweaks and adjustments. But until then, you haven't earned that right. So don't abuse it. And as you've noticed, especially with my trades, a lot of them chop around. They're not supposed to, but a lot of them do anyway. Right? They peekaboo up, pull back, peekaboo up, and they just chop. Look at Meta today. Chop, 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 chop. Okay? So, eventually, you will find your area, your modus operandi, whatever you want to call it. Jordan's saying, for example, I like doing the trend line break as a stop, but my size for one of those lows. That's what you stop, or you size for, right? Somebody else may use the entry bar. Somebody else may use double the stop, half the shares. I just find for newer traders who aren't really sure what they're doing, giving it more room is generally helpful. Okay? And then tweak it, fine tune it. But be flexible. All right. When will the insanity stop? Well, I don't know, honestly, because traders tend to do stupid stuff. Start with $5 to $10 risk. You can raise risk when 3 consecutive months of profitability. I would say if you're making 5R a month, 6R a month over 3 months, so you've made 15R, I would say you can move up from 5 to 10 or 10 to 20, etc., whatever. Same rule applies going to 25, same rule to 50, same rule to 100. Raising your risk should be a slow process. Now, you realize the time that it took to do this, right? 3 months, that was 5 to 10. 3 months, 10 to 25. 6 months now, you're at $25 risk. 3 more months, $50 risk. That's 9 months. 50 to 100, that's a year. 1 year, assuming you're making 5R a month. 1 year to go from brand new $5 risk, or 10 if you want to start at 10, that's fine, right? All the way to $100 risk. It took you a year to do that. Yes, there's no rush. There is no rush. Okay? There is no rush. So 5 to 10R would be 550 for the first. Same. If you're averaging, again, 1 month might be 8R, 1 month might be 4R, but if you can average 5R a month for 3 months in a row, then yeah, I would raise your risk. You know, if you start at 10, that's fine. I wouldn't start with more than $10, guys. 5 to 10. 5 to 10. I would tell Jeff Bezos and Elon Musk the exact same thing, because it ain't the money. It's the ego, it's the pride, and why lose more money than you need to? Because you're going to have some bad months when you start. All right? And then, hold on, we're not done. And then, experienced traders. Now that you've had, say, 1 or 2 years of consistent profitability, note what I said? 1 to 2 years of consistent profitability. Guys, I can't count how many times people email me 3 to 6 months in and be like, Jared, thank you so much, man. You're the best. Right? You're the best. Oh my gosh, I'm killing it. 6 months later, I don't know what happened, Jared, but I'm just really struggling, man. I'm just struggling. All the time I get these emails. This is why you shouldn't be anywhere near these levels of risk, 300, 400, 1,000. You shouldn't be anywhere near these levels until you have a year or two or more of consistent profitability. That doesn't mean every month. You might have a down month here or there. But over the year, you want to show me 50, 100, 200R for a year or two. And then you can start thinking about moving into the big boy league. All right? I mean, gosh, Cliff stayed at $500 risk for years. Now he's at $1,500 risk, right? You should be, at this point, trying to shoot 10R a month. I would probably lower that. Let's lower it to 8. Okay? 8 to 20R per month. Basically, someone should be getting 100R a year. You should be making 100R a year by the time you get to $300 to $500 risk. Okay? Then you go to 400, then you go to 1,000, and then you max out at roughly 1% of your cash account value. I know you all have leveraged accounts, 4 to 1, 6 to 1, I get it, but the cash value of your account, that's what you're basing your risk off of, the cash value of your account. So if you have a $100,000 account, the maximum risk is $1,000 a trade. If you have a $500,000 account, the maximum risk is $5,000 per trade. So the question is why? Why is 1% generally the max risk per trade that I recommend or suggest? There's 2 reasons for it. There's 2 reasons. So why is 1% generally the maximum I tell people to risk? 2 reasons for it. Talk to me. Let me know. What do you think? You're right, Jordan. The goal in the beginning isn't to make money. It's to get reps, to get experience, to get data. That's exactly correct. All right? Buying power is one of them. Yep. And to be able to endure a losing streak. Your risk of ruin is significantly increased if you go to 2 or 3% risk. Guys, do you realize at 3% risk that it only takes, 15 bad trades to wipe out half your account? 16, 17 bad trades to wipe out 50% of your account. Guys, I've had 6 trade, 7 trade losing streaks. I've had them. They continue to happen. They'll continue to happen. Could you imagine having a 6, 7 trade losing streak and losing 25% of your account? Damn. Right? So one, it's for buying power purposes. At 1%, you can generally be in 2 or 3 or 4 trades at the same time. 2 to 4 trades at the same time. And I think that's really all you should be in at the same time, right? Because your max money management suggests you probably shouldn't lose more than 3R a day. Probably. There may be a few exceptions to that, but 3R a day is probably the maximum you should allow yourself to lose. Okay? So you want it so you can take multiple trades. And 2, if you have a bad losing streak, you don't want to lose a bunch of money in your account. You know, it's easier. You guys have seen the chart. It's way easier to come back from a 10% loss than it is from a 50% loss. Okay, and things can steamroll quickly. All right, so 1% is really the general max. Again, if you're very experienced and you have a huge track record, and you want to push 1.5%, 2%, maybe. I've done it before in the past. I've done it before, you know, but maybe. Okay, now, yeah, we get it. Just move along already. Come on, man. What, did you think I'm stupid? Just move along. I get it, Jared. I've been through it. I've been through PTI. I've done all that before. Well, if everyone listened to what I'm saying, we would never have a need for when will the insanity stop, right? Those segments would not exist. So what I'm trying to get at by being sarcastic here is, while, yes, many of you have heard those things before, and many of you also have your money management under control, and I respect it. But you're one bad trade away from blowing up your account every day. I'm not trying to scare you, but I'm trying to scare you. You're one trade away from not taking a stop loss and having an unexpected black swan event happen. And I know you're like, that's the odds of that happening are so small. Yes, I know. But it happens. Okay? Tilt is a thing for people. and you definitely don't want to be on it. Just take your stop and move on. And this is what I want to show you guys. Look, first and foremost, okay, just put hard stops in the system. All right, I use TradeStation. That's what this is on the left. This is a different platform called Fusion on the right. I don't care what type or style of platform you have. All right, let's change those. I don't like that outline color. That's better. I don't care what platform you use. Put hard stops in the system. In TradeStation, this is a short trade. Okay, note there's a target down here. There's a stop loss right here. It's in the system. Guys, if my internet drops, guess what? It's on the server. Doesn't matter. It's in the system. Okay? Over here, you can see on this one with BAC, you can see the stop market order right over here. It's a market. And then you can see right here the target, the limit target. Put it in the system. Okay? Hard stops and broker intraday max losses that you cannot override saves lives. It's very true. It's very true. Guys, lately, I don't know, what's been going on just this week. I've had two instances this week. One happened 2 days ago, and one happened today, actually, where it was AMD a couple days ago. It was AMD. I was trying to move an order, and the system just locked up. I don't know if it was a NASDAQ issue or AMD was just so wild, whippy, and crazy that it froze my system. I don't know. I don't know what the answer is. But thankfully, I had a bracket order in. If you don't have a bracket order in and the shit hits the fan, now you're calling your broker or going on your phone, right? You're having to do some of that. Now, that's a good backup plan. That is a good backup plan. But you really don't want to be in that position. So as soon as you get into the trade, set your bracket order. 1 target, 2 targets, whatever, 3 targets, whatever. Set your bracket order. Just walk away. Walk away. Let it go. You don't have to worry about it. The computer's going to do the rest. What's your job now? Start scanning for the next trade. Start scanning for the next trade. All right? That's it. Now, on the flip side of that, leave them alone. Guys, I know you think you do, but nobody knows the future. Nobody. Okay? I mean, other than Nancy Pelosi. Other than that, there are, other than her, nobody knows the future. Okay? So, I got in Goog right here. See this little turnaround bar right there? 169.50. Nice little turnaround bar. Okay? Right? Got 6,000 shares of this bad boy. Looking good. I mean, this wasn't that long ago. Shit, this was like less than a week ago. We're in Goog. Just looking good. Right? I'm sitting there. I'm counting my money. I'm like, ooh. I'm up $2,870. Ooh, I was up $3,290. I'm like, oh, baby, just counting my money, staring at it like an idiot, staring at it. Oopsie daisy. Oopsie daisy. Goog just decided, yeah, nope, not today. Turns around, chops around, stops out. So, whatever we were, let's take a look. What were we up? At one point, I was up $3,290. And I don't know, 15 minutes, 20 minutes later, 20 minutes later, whatever, I was down $4,612. By the way, try to time that. I literally took the screenshot at the exact moment it filled my order. That's why you're seeing 0 on the side. See all the zeros? But you can see the close P&L. Literally the exact moment it filled me, I took the screenshot and it went to 0 instead of showing the minus 4,600. My point is that, I don't know, that's nearly, not quite, but nearly an $8,000 turnaround, right? What's the point? The plan is the plan. The bracket's the bracket. Walk away. Let it go. You don't know the future. This thing looked really freaking good. I needed like 20 more cents on it. We're going to hit first target. Looked great. And it turned around. You don't know. You just don't know. Guys, just take your stop loss and move on. Right? Just take your stop. I mean, this was a nice little kind of 4 or 5 bar play, whatever you want to call it. We had room back up to like 188.50. Right? We had room back to like 188.50. And we're looking good, right? I mean, I was up 60, 70 cents on BA, And then it just, you can see, there's my stop right there, 185.50. Just take your stop and move on. Oh, wait, it held my stop. It held our stop loss. And I ended up making a few grand on BA. Oh, wait, it worked. Held the stop by 4 cents, then hit first target. It didn't hit full target. It hit first target after that. Literally, do you guys remember this trade? Our stop was 185.50. Why am I showing you this? There's two reasons I'm showing this to you. One, just set your bracket and let it go. Sometimes you're the pigeon. Sometimes you're the statue, baby. And this sure looked like I was going to be the statue. I turned into the pigeon. Two, second reason, I gave it a lot of extra room. And in this case, the market god smiled upon me and held by 4 cents. Should I have stopped in 186? Probably. I gave it 185.50. Let's go back. There she is. Whoops, wrong one. There she is. 185.51. Went to 185.55. Held. It actually held. That was it. That was the low right there. That was the low. Popped. I ended up making money on this. I ended up making, I think, $3,000, I think, is what I made on this. So there's a $7,000 turnaround in my favor. The other one was against me. This one was in my favor. What's the point? It doesn't matter that this was a wider stop or a tighter stop. That every once in a while, trades are going to what? Tag you by a few pennies. Every once in a while, they're going to hold by a few pennies. Guys, just take your stop loss and move on. Right? Take your stop loss and move on. My stop loss on this was 485. That was my stop loss on Meta. 485. I'm down $4,500 on this. See the spread right there? This thing went down to like 485.08 or 485.10. I don't remember what it was, right? Right? My stop's at 485. I am 15 cents away. What? What the heck happened? Meta turns around and rips to the moon. Turned around and ripped. Okay? So $4,500 ended up turning into a full winner. Full winner. Oh, wait, Meta worked. What is the point? The point is you don't know. You don't know. You have no idea. Sure, there are times we have a better idea, but I don't have an absolute idea. Does that make sense? I'm looking at certain things going, oh man, that thing is not going to work today. There's no way. Sure shit, sometimes it does. There's other times you look at a trade and you're like, dude, this is gold. This thing is the most beautiful thing I've ever seen. And then it goes against you. Market conditions, news, stock just changed, whatever. So just set your bracket order and let it go. One, it's the safest thing to do. Two, it's the most productive thing to do because it allows you to continue to scan for other ideas and opportunities. Do it with a respectable, reasonable amount of risk when you're new. That's $5 or $10 until you prove profitability. Then you can move to 25 and 50 and 100 and 1,000 and 10,000 and whatever it is after that. But there is no rush in this business. There is, trust me when I say it, there is no rush to put your face on Mike Tyson's right hook. There's no rush to do that because that's what's going to happen if you raise risk too soon. Okay? The lesson is you don't know which ones will work and which ones won't. Use good money management and follow your plan. You might think you know, but you don't know. You have an idea, but you don't know for sure. So I'm trying to get into your heads. When you're new, you really don't know, which means risk small amounts of money, follow your plan, set bracket orders, and get back to the business of making more money, which is scanning. Most of this business, 99% of it, is doing nothing. You place a trade, you put your stop and your target in, you go back to scanning. Scanning is you're being busy, but you're not actually trading per se, right? The activity of actual trading is very short. Continue to scan. And what does scanning also do? It hones your skill set. builds your pattern recognition. The more charts you look at, the better off you'll be. But I want to reiterate, money management is extremely important. If you're not going to manage your money, don't choose this business, because the market is just waiting for you. Just waiting for you. It would be like taking candy from a baby. Please risk a ton of money. I can't wait to be on the other side of that trade. Can't wait for it. Stay away. Stay away from this stuff. Being overhyped, undercapitalized, having expectations that are completely unrealistic, having too short of a timeline, thinking you're different, thinking you're better, thinking you're special. You are not. You're not. You just are. It is what it is. All right? So, I hope that you guys learned something about discipline, patience, the idea that you don't know the future. We try to predict the future with probabilities, and oftentimes we're right, but we are wrong sometimes. And there are times when a stock looks really crappy and it still works. There are times when a trade looks really good and it still doesn't work. It still fails. So please use very small amounts of risk. Do not be in a rush to raise that risk. Set bracket orders with your entry, stop, and target on them. And then get back to the business of becoming a better trader, which is scanning and learning and building your pattern recognition. I'm Jared Wesley of Live Traders. We'll get back at it again next week.